Welcome back to Finding Perfect Property, Diary of a Buying Agent. I'm absolutely delighted to have with me today Sarah Kelly and her colleague Rob May from SPF Private Clients. Welcome to the podcast.
Thank you very much.
Thank you so much for coming in.
So good to be here.
Sarah, just tell us a little bit about what you do at SPF and who you look after.
Yeah, sure. Okay, so I'm a mortgage broker, so typically dealing with high value, complex clients. My clients operate in all different fields, so that will include like self-employed individuals, private equity, hedge funds, you name it. My clients are predominantly UK based, but also do have an international footprint. And essentially my role is to find out as much as possible about them, their financial requirements, and then go to the market to find the best solutions for them on the lending side.
Yeah, brilliant. Thank you, Sarah. And Rob, just introduce yourself and tell us a little bit about what you do at SPF.
Sure. Brilliant. So most of what I do is around inheritance tax planning, ultimately. Yeah. So at a basic level, I'm a life insurance advisor, but we use that as a product for clients to help mitigate their inheritance tax risks.
Yeah.
So put it simply, the life insurance policy ultimately funds tax liabilities in the event of a death arising and that triggering the tax bill.
Yeah.
So I've been doing that for 12 years now, more recently at SPF since I've been there for 2.5. And my clients are really varied. So that could be UK resident individuals, It could be non-UK resident individuals that might have a UK residential property here, and that's what triggers their potential exposure to inheritance tax. But yeah, almost all of what I do is around inheritance tax and solving for
Fascinating, and we'll come back to that in a minute because it's very topical at the moment. But I just want to talk a bit about SPF. And you're part of Howden, but you both specifically work in the private office bit of SPF. Yeah. So just tell us a little bit about the private office and what it does and the Howden connection as well.
Sure. So I'll start with explaining the private office. So essentially that's our home for our high value complex clients. And so typically the individuals that are working within there will just look after a handful of clients at a time. So maybe I'm probably working with maybe 5 clients at any one time compared with some of our colleagues in other areas that might be dealing with, they might have 10, 20 applications in the works in any one month. Our clients have various different touch points, both with us and with Howden on the insurance side. So just to give you an example, we might have a client who an owner-managed business. They might have their London home. They might have a country estate. They might have a place in Spain, a big art collection, a yacht, a place in Miami. And we can basically arrange finance for any of those assets and also, importantly, insure them as well and insure the person too.
Brilliant. Fantastic. And SPF, did it once stand for Savills Private Finance, but no longer?
No. Are we allowed to say that on this podcast?
Are we allowed to say that? Because speaking honestly, when Sarah and I first got to know each other, I said, oh, well, I've traditionally steered away because you're not independent, but you are now, just to clear the decks for anyone listening that remembers when you were Savills Private Finance. You're now totally independent.
Absolutely.
And when did that happen?
So we were acquired by Howden in August of 2022, so just over a couple of years ago now. And for those that are listening that don't know what Howden is or know much about Howden, so Howden's a global insurance intermediary business. Has been operating. It's our 30th anniversary this year.
Happy anniversary.
Thank you. And we have about 18,000 employees around the world, operating in over 40 different countries, and pretty much able to offer any type of insurance for private individuals, businesses, trustees,
wherever their assets may be.
Exactly.
Yeah, fantastic. Brilliant. I want to sort of ask you both specific questions, and I think I'm going to start with you, Rob. But yes, in the run-up to the budget, which is not very far away, what are your thoughts around possible changes to inheritance tax and your predictions for what might come out in the budget? And how do you think that might play out, in terms of the work and the advice that you give your clients?
Yeah, so I think if you'd asked me about 2 weeks ago, possibly a little bit longer, I would have been very firm on what my answer to this would have been.
Yeah.
And now, given some of the more recent sort of musings that have come out in the media, I'm a little bit less firm on what that position might be. But I think broadly speaking, what we're relatively confident on is there are definitely going to be some changes coming in, certainly around inheritance tax legislation and in particular affecting non-UK domiciled individuals. What we're currently anticipating is potential for inheritance tax going forwards on a worldwide basis if a client has been resident in the UK for at least 10 or more years. Where we're currently standing is there's 15-year time horizon, so that's bringing that down from 15 to 10. Also, what we think might change, although it's a little bit more speculative now, there was some suggestions that clients that had existing offshore trust structures that protected their non-UK assets from inheritance tax, there's a potential for those offshore trust structures to no longer be effective. Now, what we don't yet know is whether the existing trusts that clients have set up previously will be brought within the scope of inheritance tax, or indeed whether they will at least be grandfathered, so to speak, and so it will simply just be that no new trusts can be set up for inheritance tax protection.
So quite a worrying time for UK res non-doms, of which there are, is it 86,000 in the UK? Have I got that right?
It's around that number, and obviously the concern at the moment is how many of those might wish to remain, given what's potentially on the horizon. I think the key thing, and to answer your question around how that might change in terms of solutions and my area of advice, a key solution for a client going forwards, if they do end up with an inheritance tax exposure, will of course be an insurance solution. If we think about perhaps a rough idea of a non-dom that's been here for 10 or more years, one of the other challenges and things that may come out of the new legislation is that once they've lived here for 10 years, they might also have a 10-year tail for inheritance tax once they've left. So to put it simply, if you've got a client that's already been here for 10 years and they still have that 10-year tail once they've left, you might look at putting in place a life insurance solution to last for that specified period of time, so that by the time the policy comes to an end, they're actually home and dry as far as inheritance tax is concerned.
Okay.
So that's quite a neat solution and potentially really competitively priced as well.
Okay, that's good. Good news that you've actually got some solutions to the problems. There's rumours that the proposed changes around UK res non-doms will be watered down in the budget. What are your views on that?
I mean, it feels very much like that is going to be the case, and I think there's a lot of tax advisors out there that are very happy about that, and rightfully so, because I think it would have been a real massive step change had all the original proposals actually come to fruition. As I say, what we don't know yet is whether existing offshore trusts are going to be grandfathered, and I think that's a really key point to watch out for once we get to the announcements on the 30th of October.
Do you think insurance is the only solution? What about other options that clients might have, for example, gifting or buying properties in the names of their children, for example?
So certainly gifting is an option, at least currently. What we don't maybe know is on 30th of October whether the current rules around gifting might also be amended in some way, shape or form, or potentially disappear completely, and that's very much a sort of crystal ball gazing point. But of course, yes, clients could look to hold assets, gift them, and at least under current legislation, as long as they live for 7 years, they're outside of scope of inheritance tax. And that's where an insurance solution can also be utilised, because you can set up a policy that lasts specifically for that 7-year period where there is a current exposure to inheritance tax. But as you said, if you've got clients looking to purchase UK residential property, one thing that they could do is potentially look at purchasing in their children's names. I guess the concern there is also whether then that works from a sort of family dynamic perspective going forwards. Does a client suddenly want to give their young children, and even if they're young adult children, ownership of such a large asset and all the potential complexities that come if they then get married and who their partners are, etc. So there's a few challenges there to consider.
Interesting. And I just want to talk about life insurance more generally. Do you think that it's well known in the market amongst clients that there is this option when you're buying property that you can take an insurance policy to pay for your inheritance tax on death? Do you think most people are aware of that?
Short answer is no, absolutely not. From my experience, I think when it comes to a client's mind is generally, at least in my world, they've been to see their lawyer, they've been to see their accountant, possibly their private bank, and actually it's that individual or professional that has picked up on the potential for this being a solution for them. I think the biggest challenge with inheritance tax and knowledge from a client's perspective, particularly international clients, is that they're not used to even that being a thing in their own jurisdiction. So their biggest shock is, well, one minute, I've got a potential tax liability if I die. What's that all about? So I think that's the biggest first education point for clients. But absolutely, they tend to have no clue about life insurance as a solution.
And do you think it's a solution that fits everyone? What if someone comes to you that's, in their 60s and perhaps has had a few health issues? Would this sort of solution be right for that kind of client?
Potentially, and it's a really good question to ask. So I think, the way life insurance pricing works is a factor of how old someone is, whether they're a smoker or a non-smoker, other health factors and things involved. And all of these things can influence on pricing. Naturally, the younger someone is, the more cost effective it would be versus the older they are. And naturally, if someone's in perfect health versus someone that's got some medical concerns, the pricing again might be different. Our average client age is into sort of 50s and maybe a little bit older than that. So it's kind of that sort of feels to me like a good sweet spot, because typically someone into their 50s maybe hasn't picked up too many medical concerns by that stage of life, at least on an average basis. And in fact, even when clients do have medical concerns, the initial pricing, at least assuming they were offered standard underwriting terms, is so competitive that when you're building potential additional premium on top because of their particular medical conditions or circumstances, it can still work out to be an incredibly attractive proposition. But being honest, it's not going to be available for everyone. There will be some clients that sadly we can't get insurance for.
And of course the other solution, now coming on to Sarah, is taking finance, isn't it? That's a really simple solution for a lot of clients, is to take finance on purchase. That's the really important thing, isn't it? Not to do it after they've purchased. It doesn't work. The planning doesn't work. But to take finance when you buy, and then you're only paying inheritance tax on the equity element.
Exactly.
And how, between the two of you, with the rise in interest rates that we've seen, so how's that played out in terms of the planning landscape? Have you seen an increase in clients coming to you, Rob, because interest rates are so high that their clients are no longer taking finance because they see it as a really good thing to do to, protect themselves from inheritance tax going forwards, and actually your option is now cheaper? How's that sort of played out in a higher interest rate environment between the two?
I think that's kind of the beauty of what we're doing and how we're working together in the private office, that we are taking this sort of overall view. And it might be that a client comes to me and says that this is the reason why I want to borrow, but I'll then go and talk to Rob, and then between the two of us we'll kind of just work the figures, then we can present them back to the client and then give them the choice. But I have to say, recently it's definitely looked more attractive to go down Rob's route rather than on the lending side. But I think it's good for clients to have the option, because some, Rob, I'm sure you'd agree with this, like some clients just fundamentally don't really agree with insurance.
Yeah.
Do you say that?
Absolutely.
That's right?
Yeah.
And so to them it feels like lending sort of feels like a neater, kind of cleaner solution. I don't know whether they think the insurance is maybe like too good to be true.
I think that's a fair point. And equally, the concept of insurance to a lot of clients is maybe a little bit more alien than the concept of borrowing. Borrowing is something that in all cultures around the world is quite common, whereas insurance as a solution is perhaps less so. But as you said, Sarah, I think where we are, at least in the world today, and the interest rate environment, the big driver for potential changes in sort of attitudes around lending versus insurance has been in the arbitrage. So, typically what a client would have done, of course, was take out a mortgage at a very low interest rate, use their own capital that they retain to then invest that elsewhere, and that arbitrage opportunity makes a lot of sense. Of course, where we are today with interest rates being slightly higher, that arbitrage opportunity perhaps isn't there. So I think that's where we're seeing a little bit more sort of focus on the insurance solution.
It's interesting. And coming back to interest rates, Sarah, how have you found things? Have your sort of team been really busy, or have you been quieter? Have you found that more people are buying in cash because of higher interest rates? Because obviously you sit in the private office of the business, so you're dealing with high net worth, ultra high net worth clients. at Blackbrick, we've seen more of our clients buying cash over the last couple of years because of high interest rates. So around 50% of our clients buying in cash. So that's significantly up from a lower interest rate environment where maybe only 20% would be buying in cash. So how have you found things?
So it's certainly been challenging at times. So I think last year in particular, so our team definitely didn't do as much business as we've done previously. Now this year it has got a lot better. So I think even though rates haven't necessarily come down that significantly, because the outlook is looking more positive, and certainly today, so the inflation figure, so inflation's now at the lowest that it's been in 3 years. So that's already had quite a significant impact on the stock market. So it'll be interesting to see how that filters through. But on the cash buyers, actually something quite interesting that I'm seeing, like even in the past couple of weeks, I've got clients who bought in cash fairly recently, and now they're coming to talk about debt.
Interesting.
It might be that it might have taken a line of credit against an investment portfolio, and they actually kind of want to do something better, something different, maybe fix. Or going back to what you were saying earlier about arbitrage, choice. Like your choice, I think, is key to our clients. Like, what else can you do with that money rather than having it tied up in that asset? And then we're seeing, you're probably seeing the same, like opportunistic buyers who maybe weren't necessarily planning to buy something or not planning to buy at a certain value, but then this opportunity has come along. You've probably got a much more technical term for this, but I've had a couple of clients recently have put in cheeky offers.
Cheeky offers. That's terminology that we use.
Very good. And they've had them accepted, and they could have bought in cash, but that meant selling other assets. And like one of the clients, they know they've got a big liquidity event coming up in a couple of years, but actually this property is here right now. So debt structured in the right way just makes sense to them. So I think there's always some opportunity.
And sort of what's the in-house view at SPF in terms of the interest rate environment, and when do you think we might see rates bottom out?
So this is probably going to sound a bit of a strange answer as a mortgage brokerage that proclaims to know everything about mortgages and we live and breathe interest rates. We don't actually have a house view. And the reason for that is because I could give you sort of my take on things today, and that would have been different yesterday. So the market is constantly changing. However, I guess if we look at the people that are willing to sort of place bets, so like Capital Economics, for example, they're suggesting that base rate is going to be down to 4% by the end of 2025. Goldman Sachs are more bullish. They're saying 3%. And then there are some of the other private banks that are in between around 3.5%.
Hedging their bets.
Exactly. Totally. But today's the inflation data, again, like that certainly does look positive. So that's, I think most people are expecting that there will be a base rate cut, probably 25 basis points in November. So that is looking increasingly likely. And then maybe another one again in December.
Bit of a sweetener after possibly a negative budget.
Absolutely.
Talking about private banks, you mentioned them recently. So what's their appetite like at the moment for lending on London property? Are they keen? Are they not? Who's lending? Who isn't?
So I'd say they're very much open to lending. And again, that probably sounds like a strange thing to say for a bank. Like, why wouldn't they be open to lending? But there are moments in time where they're more focused on deposits and investments. But what we're seeing at the moment is that actually banks, certainly over the past year or so, they've seen their lending books getting paid off. So clients have been building up cash and they've not wanted to pay the higher interest rates. They've been reducing their debt. So as a result, banks are now kind of back in the market to lend more. We've seen some banks reach out to us recently who maybe had AUM requirements previously, and now they may be halving or completely getting rid of their AUM requirements, which I think that's a really strong indicator about like what they want to do. And I think, it's the good assets, the bigger deals. That's certainly what they're focused on.
So it's a good time to be shopping around for credit if you need it.
Yeah, definitely.
And clients obviously face a choice. If clients are looking to get a mortgage, they've kind of got a few different routes to market. They can go to their existing bank that they have a relationship with. They can go to the high street, or they can come to a broker. What's the advantages and disadvantages of those approaches?
So I want to steal one of your lines actually I'll let you quote it about buying in prime central London without a buying agent is
like going to court without a lawyer.
And it's exactly the same in our world. It's like you can go to your bank and they will offer you something off this product list, and that might be fine, that might be what you need. It might be the cheapest at that time, but you're restricted to this list. But then you have to meet their criteria, which will be a few more pages long. And I suppose the danger is that, like, what if you don't meet their criteria? So, for example, like, what if you've changed from being employed to self-employed? What if there's been some changes in your business? And you have to go straight back to the drawing board if your bank has said no. And as we know, sometimes banks can take quite a long time to say no, which can, it kind of reduces your risk of getting that dream property. So from our perspective, we've got amazing relationships with lenders. So to some lenders, we're their biggest introducers. We have our own teams within them. So we go straight to the decision makers if there are problems, which often there can be various different complications, whether it's the property or the client's income. We know the right people to talk to. And in some cases, we can access bespoke or sort of better rates maybe that you could get in going directly.
Yeah, so lots of reasons to work with a broker versus the DIY approach.
Yeah, absolutely.
I think there's probably one other thing I'd chuck in there, even though I'm not on the mortgage broking side. But, coming to a broker like us, we've also got a variety of different lending options that we can put in front of a client. So if you've got a client that does really want to transact quickly, and maybe the traditional mortgage route that Sarah would help them with isn't going to be immediately available, looking at things like bridging finance, short-term finance options, just to be able to get them over that line, get that purchase done, and then refinance to a more traditional mortgage. And they wouldn't necessarily get that put in front of them if they went direct to a bank.
Yeah, that's such a good point.
Absolutely. No, I totally see all the benefits. And what about the buy-to-let landscape? What's that looking like? Obviously, there's been lots of tax changes. We've noticed at Blackbrick that we've got fewer, buy-to-let clients these days because it's just not as attractive as it once was. What are you seeing on the mortgage side of things for buy-to-let?
So it's similar. So in terms of, I'd say, like individual clients looking for buy-to-let properties, we're certainly not seeing that as much. We are seeing interest from family offices who are maybe looking to acquire a whole building, for example. And we're also seeing it with private equity firms who are looking to sort of, buy up in certain areas in the UK. But something else that is actually keeping me quite busy at the moment is more the accidental landlord. So it might be that somebody that developed a property intending to sell it for profit, but then thought actually maybe now isn't the right time to sell, so maybe I'm going to let it out and get a decent yield instead. Or it could be a classic individual with a flat buying a house, and they don't feel like it's the right time to sell the flat, and they want to let it out, or maybe they're just not quite ready to get rid of their bachelor pad or whatever before before moving on.
Interesting. Rob, I want to come back to you in terms of, like, you obviously see lots of different cases. Is there a particular case that you've worked on that stands out in terms of being really unusual and you came up with this amazing solution? Are there kind of any anecdotes you can give us and our listeners about, your world?
Yeah, absolutely. I mean, to be honest, the good thing about what I do and the thing I most enjoy is how every client is so different. And that's not just from a sort of financial perspective, but also in terms of really understanding about them as an individual and their health and that sort of stuff. And you almost become like a mini doctor for a little while in their lives and trying to guide them through that process. But the one that really sticks out quite some time ago in my career now, but we'd been approached by some trustees in Switzerland who ultimately had an inheritance tax exposure on the death of one of their beneficiaries within the trust structure. And at the time, the request that they had was for something that didn't even exist in the market. So they needed something that was available to them as Swiss resident trustees. It needed to be denominated in US dollars. It had to be for a client who, the life insured that was ultimately in their 70s, was an amateur GT racer for a motor racing company as well. They participated in Le Mans 24-hour Grand Prix. So the dynamics there were really interesting. One, because of the client and what his circumstances were, and trying to get him through that underwriting process, particularly given his pursuits there, his activities that he was involved in. But equally, just in trying to find a solution that didn't exist. So what I was able to do at the time was harness the relationships that I have with reinsurers, who ultimately sort of almost demanded one of their subsidiary businesses in a European country to build a solution as a one-off bespoke requirement for that particular scenario. It was quite big numbers, so there was it made it worth everyone's while. But yeah, that was definitely the one that sticks out in my career.
Fantastic. And what about you, Sarah? Any unusual clients that you've looked after over the year, or anything, if you had to sort of pick, one case that you're most proud of, or most difficult that you managed to find a solution for, what would it be?
Yeah, sure. I think the one that I'm most proud of is the first mortgage that I ever arranged as my client's first mortgage. And so that was in London, and he then bought a country house, which I financed. He then bought a bigger London place, and at the moment, one of our colleagues is actually arranging finance on his yacht.
Amazing.
Yeah.
It's so lovely that you kind of stay with your clients.
Absolutely.
A bit, very much like us, relationship business, and
definitely
see them grow over time and over years.
Yeah, definitely. I think that's a misconception that I had before becoming a mortgage broker. I thought it was like very transactional, but actually it's like, I think particularly for the type of clients that we're dealing with, like once you're in their inner circle, you're there. And you're advising them, you're advising their friends, their family members.
But also their mortgages come to an end, don't you? So you have to get back in touch with them, say, that great deal I arranged for you is about to come to an end. I mean, are you having lots of conversations like that at the moment?
Yeah.
Are people getting nasty shocks?
Well, I suppose that goes back to my point that I was saying earlier about the clients paying off debt. That's what we've been seeing. So often for our clients, borrowing is a choice and not a necessity. And so if the rates don't feel right, they're not mass market. They're in a fortunate position where they can reduce it to sort of soften that blow. But then it might be that as rates kind of stabilise or normalise again, that they'll come back and we can have like more discussions about it.
Yeah, makes sense. And top tips, Rob, if you had to give a top tip to somebody about to buy £5 million property in London, what would it be?
Firstly, make sure that you get your general insurance sorted and organised, which is not my area, of course, but that's often, I see that from Sarah's world as well. That seems to be the thing that gets left to the last minute, and everyone's just scrabbling around to try and get that sorted. So I think my advice with any insurance solution is the sooner you get it organised or explored, the easier it is to overcome hurdles. But I think just generally, and certainly thinking about my world, again, I think it's about having that visibility on that solution, exploring the potential tax considerations once you purchase that property, and therefore looking at maybe something like an inheritance tax insurance solution to the extent that might be appropriate.
And leading a healthy lifestyle.
And that too, that always helps. Yeah, I mean, we sometimes have like a bit of a coach, like it's an MOT for a client, and sometimes we've got clients where we identify quite quickly that maybe some of their lifestyle habits aren't necessarily going to help with the underwriting process. So sometimes it's a case of, look, maybe we revisit this in a month or so and take some steps in the meantime.
Maybe we now see all the premiums come down in the new world of Ozempic.
Quite. Well, do you know what we're seeing actually quite a lot?
Are you?
Yeah, we are.
Interesting.
Yeah.
That's another podcast.
Yeah, another one. Yeah.
And Sarah, what would your top tips be for somebody about to enter the London property market and buy something?
Yeah, so get your team around you, the right team. So that could be your buying agent, your mortgage broker, your solicitor. I always say if there's one thing you're going to spend money on, it needs to be a good solicitor to get things moving along. Have conversations about finance as early as possible, like before you found the property, because I guess to Rob's point, you can work on the structuring, understand what your options are, and then once the right property comes along, then you're just ready to execute. And then finally, I'd just say, this probably sounds really obvious, but just be really open and honest with your broker. Tell us everything. Don't just tell me what you think I want to hear. Tell me everything. And then what my job is to collate all of that information. I like to say that I wrap it up like a present, tie a ribbon around it, and then it's up to me to then deliver it to the bank in the way that I know that they're going to approve it.
Yeah, I love that. That's such great advice. You're so much more than just, because, there's a conception maybe that mortgage broking, boring, insurance, boring. But actually what you guys do is super interesting, particularly in the, being part of the private office. You get to look after some incredible clients and really get to know them very, very well.
Yeah, we do, for sure.
Definitely.
Fantastic. Thank you both so much for coming on the podcast today and sharing your really valuable insights and top tips. And that brings us to the end of this month's episode of Finding Perfect Property, Diary of a Buying Agent. Thank you for tuning in. Don't forget to like and subscribe on whatever channel you use. And if you're interested in London property, please reach out. And if you're interested in insurance and mortgages, please reach out to SPF as well. Thank you for listening.